Hey there, future Wall Street wizards. Welcome to the fascinating world of the stock market where fortunes are made and dreams come true. Ever wondered how companies like Apple or Amazon got so big? How did they transform from small startups into global giants? The stock market played a huge role in their success. It's a place where companies can raise the capital they need to grow and expand. Think of it like a giant flea market. But instead of old lamps and vinyl records, companies sell tiny pieces of themselves called stocks. These stocks represent a share in the company's ownership. Why would companies do this? To raise money, of course. By selling shares, they can gather the funds needed for various purposes. They use this money to grow their business, develop new products, or open more stores. This influx of capital can be the difference between stagnation and exponential growth. When you buy a stock, you're essentially buying a tiny slice of ownership in that company. This means you have a stake in its success, and sometimes a say in its decisions. Now, the stock market isn't some magical money tree. It's a dynamic and sometimes volatile environment. Prices go up and down depending on how well the company is doing and what investors think it's worth. Market sentiment, economic indicators, and global events can all influence stock prices. But if you play your cards right, investing in the stock market can be a great way to grow your wealth over time. It's about making informed decisions and being patient. Ready to learn how? Let's dive in. We'll explore the basics, strategies, and tips to help you navigate the stock market with confidence. Whether you're a beginner or looking to refine your skills, there's always something new to learn in this ever-evolving world. The stock market has a rich history dating back to the 17th century with the establishment of the Amsterdam Stock Exchange. Over the centuries, it has evolved into a sophisticated system that drives the global economy. Today, stock exchanges like the New York Stock Exchange and Nasdaq are at the heart of the financial world. They provide a platform for buying and selling stocks, ensuring transparency and fairness in the market. Investing in the stock market requires research and understanding. It's important to analyze a company's financial health, market position, and growth potential before making an investment. Staying informed about market trends and economic news can help you make better investment decisions. There are numerous resources available, from financial news channels to online forums and expert analyses. Setting clear investment goals is crucial. Are you looking for short-term gains or long-term growth? Your strategy will depend on your financial objectives and risk tolerance. Diversification is another key principle. By spreading your investments across different sectors and asset classes, you can reduce risk and increase the potential for returns. Remember, the stock market is a journey, not a sprint. With patience, knowledge, and a bit of luck, you can achieve your financial goals and maybe even have some fun along the way. So, are you ready to embark on this exciting adventure? Let's get started and unlock the secrets of the stock market together. Before you start throwing your money around, it's crucial to understand what you're getting into. Let's get some definitions straight so you can make informed decisions. Don't worry, this won't be a boring economics lecture. We'll keep it simple and engaging. Remember those tiny pieces of ownership we talked about? Those are stocks. They're also called shares. Same thing as stocks. It's just a different way of saying it. Stocks and shares represent ownership in a company. Think of it like soda and pop. Different words, same sugary drink. Whether you call it a stock or a share, it means you own a piece of the company. Some companies like to share their profits with their shareholders. This is one of the perks of owning stocks. They do this by paying out dividends, which are like little cash bonuses. Dividends can be a great way to earn passive income. Imagine trying to keep track of the prices of every single stock out there. Talk about a headache. The stock market can be overwhelming with its constant fluctuations. That's where market indices come in. They simplify things by tracking a group of stocks. They track a group of stocks, giving you a general idea of how the market is doing. This helps investors gauge the overall market performance. Think of them like report cards for the overall market. They provide a snapshot of how well or poorly the market is performing. Some popular ones are the S&P 500 and the Dow Jones Industrial Average. These indices are often mentioned in financial news. Got all that? Great. Now let's move on to the fun part, actually investing. Investing can be an exciting journey, but it's important to do your research and understand the risks involved. Start by educating yourself. Read books, watch videos, and follow financial news to stay informed. Consider consulting with a financial advisor to get personalized advice. They can help you create a strategy that aligns with your financial goals. Set clear financial goals. Whether it's saving for retirement, buying a house, or funding your child's education, having specific goals will guide your investment decisions. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different asset classes to reduce risk. Regularly monitor your investments. Keep track of their performance and make adjustments as needed. Investing can be rewarding, but it requires patience and discipline. Stay committed to your strategy and watch your investments grow over time. Ultimately, the goal of investing is to achieve financial freedom. With the right approach, you can build wealth and enjoy the fruits of your labor. So, are you ready to start your investment journey? With the knowledge you've gained, you're well equipped to make smart investment choices. Happy investing. Ready to start buying some stocks? You'll need a brokerage account first. Think of it like your online stock shopping cart. There are tons of brokerages out there, each with their own fees, features, and fancy bells and whistles. Some popular options for beginners include, known for its easy-to-use app and zero-commission trades, offers a wide range of investment options and educational resources. Another great all-around brokerage with excellent customer service. Don't get too caught up in finding the perfect brokerage. The most important thing is to choose one that you're comfortable with and that fits your investing style. Section 4. Knowledge is power. Researching your prey. Stocks. Now that you have your brokerage account set up, it's time to start looking for stocks to buy. This is where the real work begins, and it's crucial to approach it with a strategic mindset. But don't just go throwing darts at a list of company names. Randomly picking stocks is a recipe for disaster and can lead to significant financial losses. Just like you wouldn't buy a car without kicking the tires first, you shouldn't buy a stock without doing your research. Think of it as a thorough inspection to ensure you're making a sound investment. Start by looking at companies you're familiar with. These are businesses whose products or services you use and trust. Familiarity can give you a head start in understanding the company's market position and potential. Do you love their products? Are they popular among other consumers? A strong customer base can be a good indicator of a company's stability and growth potential. Do they have a strong track record of growth? Are they well managed? Look at their financial history, leadership team, and market performance. Consistent growth and competent management are key factors in a company's success. These are all good signs that a company might be a good investment. Positive indicators can help you build confidence in your choices and reduce the risk of poor investments. You can find a ton of information about companies online, including their financial statements, news articles, and analyst ratings. Websites like Yahoo Finance, Google Finance, and Bloomberg are excellent resources for detailed company data. Don't be afraid to dig deep and really get to know the companies you're considering investing in. Read their annual reports, listen to earnings calls, and stay updated with the latest news. The more informed you are, the better your investment decisions will be. Additionally, consider educating yourself through online courses, webinars, and financial seminars. Continuous learning can enhance your understanding of market trends and investment strategies. Utilize tools like stock screeners to filter companies based on specific criteria such as market capitalization, dividend yield, and price-to-earnings ratio. These tools can help you narrow down your options and focus on stocks that meet your investment goals. Finally, don't hesitate to seek advice from financial advisors or seasoned investors. They can provide valuable insights and help you create a diversified portfolio that aligns with your risk tolerance and financial objectives. By thoroughly researching your prey, you can make informed decisions and increase your chances of success in the stock market. Remember, knowledge is power, and the more you know, the better equipped you'll be to navigate the complexities of investing. Section 5. Risk versus reward. Don't bet the farm. Remember that giant flea market we talked about earlier? Well, like any good flea market, the stock market can be a bit unpredictable. Prices can fluctuate, sometimes dramatically, and there's always the risk that you could lose money. That's why it's important to only invest money that you can afford to lose. Don't put your rent money or your emergency fund into the stock market, and don't expect to get rich quick. Investing is a marathon, not a sprint. The good news is that over the long term, the stock market has historically trended upwards. So while there will be ups and downs along the way, if you're patient and disciplined, you're more likely to come out ahead in the end.